Good morning, everyone. If you can see my screen and can hear me very clearly, kindly type in hi in the comment section. A359, good morning. Oh, great. Thank you very much. Good morning. Tyoro, good morning to you. And Jerry, okay. CCI Euster, hi. Thank you. Aborina, hi. Bronze, okay. Thank you for that confirmation. So I just want us all to be on the same page so that I wouldn't be speaking into thin air. All right. How about 8-9? You're welcome. Thank you. Beautiful. It's another beautiful morning here, and the temperature is around 22 degrees Celsius, so it's a little bit cold. And hope you. So let's kickstart today's session. And the first thing, as usual, I welcome you all to yet another beautiful session of Extreme Speed Live, hosted by my humble self, Sheriff Daramola. And I shall be taking you on a trading journey where we shall be looking at chart patterns, looking at the charts. We're going to be evaluating the charts and looking out for structures, patterns, and using those parameters to identify trading opportunities lining up for us during the New York session. And I also want to clarify this. My analysis here is strictly and basically a technical analysis. So what this simply means is that I try to understand the psychology of the market using price movement. And with the price movement, we could be able to tell based on what structure has given us in the past, the direction and what intention are unfolding in the market at any point in time. In addition to that, if you have any pair we want to be looking at, you want us to look at here on Extreme Speed Live, feel free to drop it in the comment section and I will try as much as possible to squeeze it in my schedule for this morning. So we are going to be deliberating on the pairs we looked at yesterday. I think we had about 5 to 6 pairs we talked about, we deliberated on yesterday. So we are going to be looking at these pairs to see how well they are doing so far. And after which I will be giving advices that are necessary to guide our actions going forward. And if there is a need that we hold on those trades, I will be letting you know. So I want you to fasten your seatbelts, stay tuned in through the end of the session so that you don't miss out on any important information I might be dishing out during the course of the session. So without further ado, let's dive into the chart and let's see what is happening at this point in time. The first pair we're going to be looking at, as usual, is the US oil. And if you're in the US oil yesterday, we were able to run through and we're running in profit at this point in time. Price moved all the way as expected. And right now, if you are taking that move, you will be around at least a minimum of 300 pips in profit at this point in time. If you are taking advantage of that move, very big kudos to you for being able to be on standby to take advantage of that momentum that started yesterday. And remember what I told you here on the US oil, where I told you if price breaks below the key level at $95.50, as at yesterday it was $95.50. I just readjusted that key level this morning when I was looking at my chart. So I told you that if price gets to $95.50, you want to move your stop loss to break even, as we want to see how price action is going to relate with that level. So let's kick in and see how price is relating with that level. And remember, we had this bullish trend line that we identified and has been holding price action, and right now we saw that price has actually broken down of that bullish trend line during the course of yesterday's New York session, giving us a clue of a bearish potential. That is the first thought that will come to our mind. But it's not all the time price does that, and that is why we need to be very, very careful at this point in time. We're already in profit at this point, and we don't want to lose out on whatever we have gained so far since the beginning of the week. Now, if we look closely into the structure we have here, we can see that since the breakdown of that bullish trend line, what do you observe? The first thing you observe is that price has been caught within a consolidation phase as price continued to juxtapose between the $92.3 area and the $95 mark. As you can see, we saw our price has been oscillating right within this range, so it's ranging at this point in time. So I will be advising that we stay clear at this point, as we want to wait for breakout of that structure to give us a signal that price is actually moving in whatever direction it's broken into. And another thing I want us to look out for at this point is that if we look left and look at what structure has been giving us since the middle of July, we will notice that that area has been at one point a demand zone that pushed price to the upside. It's an area where participants gathered to push price to the upside, and you can see, and the same thing is happening around this area, and we have been witnessing a consolidation phase in the last 12 to 18 hours right now around that area, giving us a clue into the strength that is in that area for buyers. So at this point, that is why I have insisted that we remain patient and let's see how price action is going to respect this level. So what we want to be doing right now is to identify that structure, and to do that we have to bring out our line chart so that we can have specific points to use to connect. So what are we going to be doing now? Let's connect this. So that's the first one, and I'll be giving this a purple so that we don't we can differentiate it from our key level. So we have another one right here. So we have a channel already, and that channel could be called a bearish rectangle pattern, a bearish rectangle structure, and this is what we have right now. So price is within a consolidation phase in the short term perspective. So what we're going to be looking out for is this: we either going to wait for price to break down of that structure to give us a signal that it wants to continue to the downside. And remember, we are not getting too excited at the sight of a signal, as we want to wait for further confirmation in the form of a retest of structure. That is, price should come back to do a retest of either the channel, probably into the structure around here, or it could go as far as retesting that bullish trend line we identified on the 1 hour time frame, and the key level at $95 mark. But one thing we want to be looking out for at the retest is a reversal pattern on our lower time frame that will insinuate that we could go to the downside from there. And one thing we want to I want to say here is that this selling opportunity is going to be a very short one, as we might be having around, let's say, how many pips, like 100-200 pips to catch here, as we want to see how price is going to relate with this level at the potential demand zone that we identified during the course of last week trading session around this area, between the $90 mark and the $92 area. We want to see how price will relate with that level. So our take profit target is going to be within that area. And if at any point during the New York session we later saw a breakdown of that demand zone, then we want to wait for price to do a retest of that structure to give us further confirmation in the form of a reversal pattern on lower time frame to join the decline. So that's the first scenario we want to be looking out for here on the US oil. And the other scenario is that we could be having a bullish momentum from this point. And how is that going to happen? What signal are we going to be looking out for? Well, it is very, very obvious. Since we are in a channel, we want to see price break the resistance point of that channel. That is, price breaks above that channel, we have a significant breakout. And when I mean significant breakout, I mean we want to see an engulfing candle taking us out of the $95 mark, which is the key level that's supposed to be guiding our actions this week. So if price breaks out of that area, then one thing we want to be doing is not to get too excited at the sight of the signal we are looking for. We want to wait for price action to do a retest of structure to give us further confirmation to join the rally. And the retest can come in form of a retest of the key level at the $95 mark, or it could go as far as retesting that bullish trend line, or probably come back into the channel we identified here to take in some more positions, after which a reversal pattern on lower time frame should give us further confirmation to join the rally. And if the rally is going to happen, well, I will be saying that the $100 mark appears to be a very reasonable point we can be aiming at least for the meantime, which will dovetail to about how many pips, that is at least minimum of 450 pips to catch if price moves in that direction. And one thing I also want to say here as a caution note, let me put it that way, is that if price comes into this $97 mark, remember we have a bearish trend line around this area. If price comes into that area, we want to either move our stop loss to break even, or we want to lock in some profit at this point, as we never can tell how price is going to relate with that level, as there is a possibility that price will come into this bearish trend line, do a reversal pattern that could send price crash into the downside. And if we actually had a breakout of that trend line, then a retest of the trend line should give us further confirmation when we see a reversal pattern on lower time frame that we want to join the rally to the upside. Then this kind of scenario should welcome an opportunity to add more position to our existing trade. So this is the scenario I'm looking out for here on the US oil. So let's see how price action plays out during the New York session. And I'm very sure we are well equipped at this point. So any scenario that comes up will not get us caught by surprise, as we've already prepared to meet these expectations. So we already have two free scenarios we are looking out for here on the US oil. So like I always say, I want you might want to screenshot my screen so that you can use it as a reference point when you're about making your own individual decision during the New York session. So if you have any question whatsoever regarding what I have discussed so far, probably you need further clarifications, or you need further inquiry into the structure we have here, kindly drop in a word or two in the comment section, and I will be willing to be of help in that regard. So I'll be taking the next 10 to 15 seconds off right now. So let's see if we have any questions whatsoever. Please feel free, drop a word or two in the comment section. Okay, 925, hi, good morning. All right, CCIUSD wants us to do something on AUDUSD. Okay, we will look at that. I'll pen that down right away. I personally have a position on AUDUSD, which I took yesterday, though I was caught with a break-even situation, and I'm planning to take it again this morning. But I will be sharing my perspective on the AUDUSD as well. So I already penned that down. CCI I hope you stay tuned in with us through the session so that you don't miss out on my perspective on that. What kind of loser would blame their loss? Of course, well, like I used to say, one has to take responsibilities for his or her action. If you continue to blame an external party for your losses, then you are not you are not you don't want to learn, you don't want to improve. So the only way you can improve is not abdicating your responsibility. Own your failures, own your successes, and when you continue to do that, the right things will click, and before you know it, you'll be on the positive side of trading. Thanks for that advice. Grab sugar. Okay. Three five six. Good morning to you. Good morning 668. Hey, hi Max. Missed you yesterday. Hope you're okay. All right. So, um, in the absence of no questions, I want to assume that we all understand what I've explained so far. Sisi, I used to. Okay, you're welcome. Geopoker, good morning. So, let's move on to the next pair from here. The next pair, as usual, is the UK oil. So, let's look at what we're expecting on the UK oil. So on the UK oil, we also had a similar scenario yesterday where we are able to take about how many pips that is from here. We took price right into this area. So presently we are running with about 400 pips here on the UK oil, and what is going to be our expectations going into the new week, sorry, into the New York session. And well, we have a similar scenario with what we have on the UK, on the US oil here, and that is if we look at what has happened since price broke below the $100 mark during the New York session yesterday. We saw that price has also been caught up in a consolidation phase as price continued to juxtapose between the $98.50 area and the $100 mark area, giving us a clue into the indecision that has gripped the market at this point, as participants are actually waiting for a catalyst that would give them a signal to join the rally or decline, whichever happens. So now with the structure we have here, definitely the first thing we want to be doing is to identify these levels, and then we should be having a channel after we finish identifying this level. So the first thing we want to do is connect this one, and for the other part, let's use the $100 mark as the resistant level, which so let's do some readjustments here. So we have something like this, and we use the $100 mark as our key level. So I want to give this a golden color so that we know that's our key level. So with the structure we have here now, we have a structure, we have a channel, we want to wait for signals, and the signals will either come in form of a break above of the channel or a breakdown of the channel. And before I share with you a visual representation of the breakout, the signal pattern I want to be looking out for, it is pertinent that I call your attention to what structure has been giving us since the early days of July. And if we notice around the $98.50 area, it has been a demand structure, just like what we have on the US oil. You can see we had a scenario here which pushed price to the upside from this point. We also have a scenario around this area also in the middle of July which pushed price to the upside, and price is right back within that area. And at that area, it's expressing an indecision that has gripped the market. So what this simply means that price has come back to a level, a familiar level that has been a niche, a demand niche in the past, where people have come to buy the UK oil. So now we need to be very, very careful at this point. For those who are taking advantage of that bearish move yesterday, kudos to you. One thing I will be saying at this point is that you want to move your stop loss to, I think, the $100 mark at this point in time, so that you can lock in some profit and you don't get caught up in an unnecessary spike that might take price back into probably the 107 level. So with this structure we have here now, that we've identified that this area has been a demand zone in the past, so definitely we want to be mindful of how we want to take advantage of any momentum here. So for me personally, I will be thinking from the structure we have here, considering the nature of this level, I will be thinking that we might be having a breakout of that $100 mark during the New York session today, where a retest of structure will give us further confirmation to join the rally to the upside. And if the rally is going to happen as expected to the upside, then we want to be having our take profit target right within the supply niche here, around between the $106 mark and the $110 area as our take profit target. And if you look into the past, we can see that we have a bullish trend line here. I want to wave it so that you can see that bullish trend line I'm talking about is a green dotted line. Remember, we had a breakout of that trend line during the course of last week's trading session. We saw a breakout retest of that level, so there is a likelihood that price might come back to do a retest of that level before we might see a bearish scenario. But we are not sure when that is going to happen, or if that is going to happen. But we want to focus on what is happening presently, which is if we see a breakout above of that key level at the $100 mark area, we want to wait for a retest of structure to join the rally to the upside. Now, what if price breaks below that channel? That's another scenario we want to look out for. If price breaks below that channel, that is, we see a break below the channel, then that is a signal that we want to be going bearish. And if that happens, remember, we are not getting too excited at the sight of a signal. We want to wait for price to come back and do a retest of structure, and that should come in form of price coming back into this area. It will come back to do a retest, or it could go as far as rejecting that key level at the $100 mark, where we want to be looking out for reversal patterns on lower time frame to join the decline to the downside. And if the decline happens, well, where will our take profit target be? Very simple. We don't want to be over ambitious here. So if we look left, we can see we have a demand structure that has been played out in the past, where price action has respected at one point in time here at around the $94, $95 area. So one thing I want to be saying is price, my take profit target should be within the zone, at least for the meantime. And if we do have a breakdown of that structure during the course of the New York session, then we want to hold on to for confirmations in the form of a retest of structure before we join the decline. So that's the scenario we want to be looking out for here on the UK oil. And so let's see how price action is going to play out during the New York session. Is there anything I would like to emphasize here? Okay, nothing much. So if you have any question whatsoever, feel free to drop a word or two in the comment section. If you have inquiries, you want further confirmations, I will be willing to be of help. Drop a comment and let's see. So I'll be taking the next 10 to 15 seconds off to read the charts. And if you have questions, feel free to drop in a word or two and I will be willing to be of help. All right. Okay. Well, I can see some comments here regarding losing trades and all that. Well, one thing I want to be saying here is this. In trade is a business where um, it's a roller coaster. We have your profits, you have your losses, and when you have your profits, be willing to accept them, and when you have your losses, be willing to accept them. And if you have your losses, the only way you can get out of this your losing streak is to actually understand why you are losing. Now, it boils down to two factors: psychological. You have to look at that. That means you have to know yourself. You have to have the self-awareness of who you really are. What emotions are driving you when you're about making those trades? Are you being driven by greed? Because there are quite a lot of emotions during trading. We have greed, we have the fear of missing out, and then you have the objective feeling. So if you are being driven by greed, then definitely if you are losing, then you need to look at that part of you that's been greedy. And if you're losing because you're fearful, or probably you jump into a moving train, you don't look out for structures before you join, and you just join because you're fearing that you might miss out on this move, then you need to step back and actually look at those yourself in that regard and see how you can change that pattern of yours. Learn how to sit on your hands when your your strategy is not yet the parameters you're looking for your strategy to confirm is has not yet evolved. So these are things you really want to look out. And then the other thing when it comes to analysis is this: if you notice how I've been explaining how I've been analyzing the market, you realize that I emphasize that we want to look out for signals. Remember, when we have a signal, we are not getting too excited. When we get a signal, we wait for the signal, we wait for confirmation after we've seen a signal. So if you are patient enough, every single time when you see a signal, that is, you see a bullish engulfing candle or you see a bearish engulfing candle, you see a very strong move to either direction, remember you want to breathe in, breathe out, remain calm and wait for price action to give you the confirmation before you want to join. So most of the time, the mistakes most traders do is that when they see that move, they see that impulsive move, they just join right away without having a strategy, without having a structure to look out for. So it's better you look out for the structures, you look out for confirmations before you join any potential opportunity you see on the chart. And if you look at my analysis so far, that's why I try as much as possible to give you a scenario where we want to look out for signals, and if we see signals, then we get ready in the form of a confirmation to join that structure. And if the confirmation does not come, you pass the trade. It's okay. I used to say one thing: it's better you don't take any trade, you don't lose any money, than to take a trade and lose money. So if you have a strategy, if all the parameters of a strategy are not yet aligned, please sit on your hand and wait for price action to fulfill all your objectives before you take a trade. So this is the most thing. So it's not about the app, it's not about the broker, it's not about the market itself. There's nobody manipulating the market. It's about you understanding who you are. So this is simply what I would like to say at this point, so that people will have to shift their mindset into making money, trying to understand who they are to make money. So let's move on. Then we have this situation. Okay, prediction on US oil. I think we said something on US oil already, and if you don't mind, stay tuned in to the end of the session when I will do a recap of what we have talked about so far, so that you can see what we discussed. So we want to move on to the next pair, and the next pair we deliberated on yesterday is the GBPUSD. And on the GBPUSD, I was on the bullish momentum yesterday. I was expecting that bullish momentum yesterday, which finally happened. And remember, I shared with you a scenario here where I told you our price has been respecting that bullish trend line since sometime in July. We have price respecting that bullish trend line on our 1 hour time frame. We can see price has been finding consecutive higher highs and higher lows since in the last 2-3 weeks, and I'm of opinion that this trend might continue throughout the week. And as long as price action is oscillating right above that bullish trend line, I want to be thinking of a bullish potential. So during the course of our session yesterday, I was able to identify a simple setup for us here, where I said we should be looking forward to a retest of this level to take advantage of a trend continuation to the upside. I told you I was in this trade yesterday, and I was able to move my stop loss to break even as soon as price was rejected the 1.22800 area, and I was stopped out at break even, and I've already done a re-entry at this point. So one thing I'm saying here is this: we have a structure already, and if we have a breakout of that structure, like I was explaining earlier, wait for signals, and signals comes in form of a breakout of structure. So we have a breakout of structure already. We have a breakout of the 1.21900 area. You can see this level has been a supply niche in the past. Hold on a second, let me show you. Let me give you a visual representation of what I'm talking about. So we see we have a supply niche here in the past, though we saw a faint breakout here, but price came back to a sell situation. Then we saw a supply niche around here until we saw that breakout of structure, which broke out of the previous high, giving us a signal that we might be having a bullish potential for this week. So now that we have that confirmation, remember, we are not getting too excited. We wait for price to come back and do a retest of structure, which has happened right now. Price came back to around the 1.219 area, and I took that opportunity to enter that trade at this point, and let's see how price action is going to play out. So at this point, even if price breaks below the 1.219, that is, if we see price break below this level, there is a likelihood that it's coming back to do a respect of this bullish trend line, where a reversal pattern from here is also a very good possibility of joining a potential rally to the upside. So we have two scenarios here where we can take advantage of a bullish momentum. The first one is right above the 1.219 area, and if we do have a breakdown of structure, price comes down into the bullish trend line, then we might be able to take advantage of another opportunity if we see a reversal pattern. So now let me share one thing with you. Don't be scared of your losses. As long as you have a structure, you are confident of your structure, you know that you're having a bullish opportunity here, stick with it. Now, for instance, I have a scenario here. I've entered the trade right now, and if price continues to go to the downside from here, you know I'm going to be stopped out. Yes, that's a loss for me, but I'm not going to be disappointed, because I still know we still have a bullish momentum here. So if price still comes back down into this bullish trend line and I see a reversal pattern, then I will join. And when I join, I know I'm going to recoup whatever I have lost so far. So if price goes right above that bullish trend line, I see a reversal pattern, and price continue to the upside, I am very sure there will be opportunities in the future where I will be seeing retracement into an area where it will give me another opportunity to add more position to my existing trade, hereby recouping all whatever I have lost while I was trying to identify that bullish potential. So these are the things we need to look out for. If you lose, that's not the end of the road. Losing is just a way of learning. Try to understand your market structure, understand how price is moving. If you do understand how price is moving, then definitely you know, okay, fine, this is going to be a bullish potential here, but you don't know when it's going to happen. So you continue to take opportunities until you finally get it right. So that's why you have to risk. That's where money management comes in. You have to risk a size of your portfolio that is reasonable, that you can afford to lose. Some will say 1% of your portfolio size, and this is dependent on the amount you have in your portfolio. Some risk 0.5% of your portfolio size, some risk 1%, some risk 2%. It depends on how well you understand the market. That will determine how much you want to risk. So you need to have a position size calculator so you can calculate how much you want to risk on each trade. So if you have that, you will not feel bad when you lose money, and when you make money you feel great as well. So this is what I'm saying here right now. So I'm taking advantage of this move right above the 1.219 area, and if price breaks below and I get stopped out, I'll wait for price around this area, around the bullish trend line here, looking for another opportunity to take advantage of any bullish opportunity from this point. So where will our take profit target be at this point? Our take profit target is going to be right around, at least for now, right around this bearish trend line we identified on the daily time frame. You might say, which trend line is that? I will show you. Let's scale up to the daily time frame and let's see what I'm talking about here. So that's the bearish trend line I'm talking about. So I'm expecting my first take profit target around that level. That's around the 1.235, 1.24 area. And then if we have a breakout of that structure, then I now know, fine, we have a signal that we are going bullish. And remember, we are not getting too excited at the sight of a signal, as we want to wait for further confirmation in the form of a retest of structure. So I want to see price come back and do a retest of that bullish trend line or the bearish trend line here, after which I'll be looking for a reversal pattern on lower time frame to join the trend continuation to the upside. So there is no fear of missing out here. Can you see? When we see a signal, we want to breathe in, breathe out, and wait for price action to give us the confirmation before we want to join any momentum coming in. So this is the scenario I'm looking out for on the GBPUSD. So if price breaks out of that bearish trend line, then I will be looking forward to taking advantage of a trend continuation at a retest of structure. So that's my perspective here on the GBPUSD, and I'm not going to be doing a sell. Some people are asking me if it is good to sell the GBPUSD. Well, I'm not going to be doing a sell until I see a breakdown of that bullish trend line. Remember, we have a bullish trend line here. If I see a breakdown of that bullish trend line, then I know there is a possibility that a selling momentum could be coming in. And if that signal comes, we are not getting too excited. We want to wait for price action to give us that confirmation, and that confirmation will come in form of a retest of structure. It could come into that bullish trend line to retest it, or it could go as far as retesting the 1.219 level, after which we are looking for reversal patterns on lower time frame. And when we say reversal patterns, we want to look for your double top structure, your head and shoulder pattern, your wedge, your rising wedge, whatever pattern that is. We want to look out for that pattern to give us further confirmation that we are actually going bearish on this one. So that's the scenario I'm having here. So I'm not selling the GBPUSD yet until I see that breakdown of that bullish trend line to give me a signal that we are going bearish. So my momentum here, my perspective on the GBPUSD still remains very bullish, and let's see how price action plays out during the New York session. And if you have questions whatsoever, feel free to drop in a word or two in the comment section, and I will be willing to be of help. Okay. Any questions whatsoever on the GBPUSD? $729, hello, you're welcome on board. All right, let's move on to the next pair. The next pair we deliberated on yesterday was the gold, and then let's see what's happening on the gold. My momentum on the gold still remain bullish, and what do we have here? Prices still running as expected. And hold on a second, let me take this off. Hold on. So this is what we have here on the gold. We had a signal yesterday which I shared with you yesterday, and I told you how a breakout of that of this level, we took advantage of this move. We saw a break above, we saw a breakout of the bearish trend line, Price came back to do a retest of structure, give us confirmation in the form of a reversal pattern, and boom, we had a breakout of that level. So if you are taking advantage of that move, kudos to you. But unfortunately, price came back into our entry area. So we are not yet stopped out. So I'm still expecting price to continue to the upside from here. Probably break out to do a retest of this $1,774 level, after which we might be seeing a trend continuation to the upside from here. So my momentum here still remains bullish unless we continue to see price break below that bearish trend line. So you might be asking me, which bearish trend line am I talking about? So let's scale up to the 4 hours time frame, and you can see the bearish trend line here. It's more or less like a channel, a descending channel. We have the resistance level of the channel and we have the support level of the channel, and this resistance level of the channel is where price action broke out of during the course of yesterday. Broke out of this place during the course of yesterday's trading session, giving us a signal, a bullish signal, which we want to take advantage of as we continue to monitor price action during the New York session. So this is the scenario we have here on the XAUUSD. So I still expect price to continue to the upside from where we are right now. So hold on a second. So against the New York session today, I already have a key level I've identified for you here to make our job easier at $1,775 mark. Is it $1,774 level? Let me identify that level. 1,774 level. We have it right at the top here. Let's have it at the top left hand side. So we have 1,774 level. So I want to be buying right above this level. Anywhere below this level doesn't seem fine for us for this week. Right above this level is most appropriate to take advantage of any bullish momentum here on the gold. So if that happens, where will our take profit target be? Well, if we take profit targets for now, on a long-term perspective, I'm aiming at the $1,820 area, which shares a confluence with the bullish trend line we identified on the daily time frame. However, in order not to be over ambitious, we could aim at the $1,800 mark, at least for now, which dovetails to about 2,500 pips in the meantime, and let's see how price action plays out from that point. So in the meantime, $1,800 mark appears to be most reasonable for a take profit target on the gold. So any questions whatsoever on the gold? If you have questions, feel free to drop a comment in the comment section, and let's see if we can be of help. And for selling momentum here on the gold, let me see. For a selling momentum here on the gold, I want to see price come back into the descending channel. That is, price breaks down that bearish trend line, the resistance level of that descending channel we identified on the higher time frame, breaks down, then does a retest of that level, then I want to join the decline. That's the only time I'm going to sell. So I'm going to sell only when price breaks below that bearish trend line. Let me show you that bearish trend line again on the 4 hours time frame. You can screenshot my screen if you don't mind. So on the 4 hours time frame, we have this bearish trend line here. So I want to see price break down that bearish trend line. If price breaks down that bearish trend line, then I know we have a signal that we are going bearish. But remember, I'm not joining right away. I want to wait for price to come back and do a retest of structure. That is a retest of that trend line. Then I want to join that decline. And if that decline happens, then around the $1,740 area appears to be most reasonable for our take profit target area. You can see we had a key level at the $1,740. We also have a bullish trend line here, which also gives us a possibility that price will come back into that bullish trend line to send that bullish momentum coming in. So this is the scenario we are looking out for on the XAUUSD. I'm bullish on the XAUUSD, but if I'm going to sell, I want price to come back into the channel, into the descending channel, for me to take advantage of any selling momentum here on the gold. So any questions whatsoever, feel free to drop a comment and I will be willing to help. So should we move on? And now let's take AUDUSD. Somebody, I think someone made mention of AUDUSD earlier. All right. Okay. CCIUSD wants us to do AUDUSD, so I'll be doing AUDUSD right away. So let's wait for 10-15 seconds to see if we have any questions coming in regarding what we have just talked about so far before we move on to AUDUSD. $665 wants us to do US tech. All right, let's see if that's going to be possible. I think I still have around 10 minutes left. Let's see if that's going to be possible for today. I will try as much as possible to make it happen. All right, so let's move on to AUDUSD. So on the AUDUSD, I was expecting a bullish momentum on the AUDUSD yesterday, and I was stopped out at break even. Hold on a second, let's see. I was stopped out at break even, and let's go to the higher time frame so that I can share with you what my expectations were. On the daily time frame, it's very obvious that we are on a very strong bearish momentum, and with the look of things here, there is a tendency that price might continue to go to the downside. As we can see, we could see that we had this move from on the 2nd of June. Price came as far as the 0.67 area, after which we saw something like a retracement phase back into this level, and there is a possibility that price could continue to downside from there. Very correct, very possible. However, it's not all the time price action moves like this, as there are times where we could be seeing a fake out in a direction and all of a sudden you see that price moves in the direction you were expecting. So now I scaled down to the 4 hours time frame, and on the 4 hours time frame, one thing I came to observe was that there was a bullish trend line I was able to identify that started the month of July, and that's why I drew this line across this level at this point. Hold on a second, let me readjust it, and I will give you a visual representation of what I'm talking about. Here we saw price respected this key level here at 0.68700. Price came back to respect that bearish trend line one more time, broke down of that bullish trend line. Price came back to respect that bearish trend line, form something like look like a double bottom structure, break out of that bearish trend line, respected that bullish trend line, and we saw a breakout of that bullish trend line. And since price broke out of that bullish trend line on the 20th of July, price continued to find consecutive higher highs and higher lows, giving us an impression of a bullish momentum coming in. Now, we started the week around this area. I was actually expecting a bullish momentum but didn't know where it's going to be. And since price was oscillating right between the 0.69800 and 0.69700, I took a buy opportunity, though I locked my profit at a certain point, but unfortunately price came back down to take me out at break even. Now price is back within the bullish trend line we identified here, and that makes this area a very significant and sensitive area to look out for going into the New York session today. And if we look for the left, we can see how that same level has been a major determinant of price action. You see here on the 20th of July, it was a resistant point. It was a resistant point here before we saw the breakout of that structure, after which price became a demand zone here. Then it came back to be a demand zone multiple times during the later part of July, and on the last day of July, trading day of July, we saw it was a demand zone again. So that level is more or less a very, very, very significant level, not to be ignored. Now that we have identified this data, we have gotten a clue into how this area has been a major and significant aspect in determining price action in the past. Then we need to come and look at how we want to take advantage of any potential opportunity around that area. So the first scenario we want to be looking out for is that price could respect that key level, form a reversal pattern that breaks back above that bullish trend line, after which we look out for opportunities on lower time frame, reversal pattern on opportunities lower time frame to take advantage of a bullish potential. That's the first scenario we want to be looking out for. That is, price respect that 0.69150 level, goes back, climbs back to the top of the bullish trend line, forms a reversal pattern on our lower time frame, and then we can now join after that confirmation has been made. So that is the scenario we want to be looking out for during the New York session. That's number one. Then the number two situation we have here is that we might be having a bearish momentum. And since we have something that looks a little like a breakdown of that bullish trend line here, we want to see if price is going to break below the 0.6915 level. If price does breaks below the 0.6915 level, then that gives us a signal that we are going bearish. Remember, we are not getting too excited at the sight of a signal, as we want to wait for further confirmations to join the decline. So we are waiting for confirmation in the form of a retest of that key level at 0.6915. It could be at that level. It could go as far as retesting that bullish trend line. But the most important thing we want to be looking out for is a reversal pattern. So in this, I want to cite, let's say, double top structure. Let's say this. I'm just suggesting it could be a head and shoulder pattern that could form. If we now see a reversal pattern around that area, then that gives us a further confirmation that we want to join the decline to the downside. So this is how we are going to take a selling opportunity on the AUDUSD. So we have two scenarios already on the AUDUSD right now. We're expecting price to break above to continue that bullish trend line. That's the first scenario we're looking out for. And then the second scenario is if price breaks down the 0.6915 level, then we want to be looking for how to take advantage of a selling opportunity here on the AUDUSD. So if we are going to be selling on the AUDUSD, where will our take profit target be? In the meantime, let our take profit target be around the 0.67968 area, at least for now. And the reason why that, if we look left, this area has been a demand structure. It's been a selling niche. It has been a demand. You see how this area has been a very significant level in the past. So we want to see how price will relate with that level before we take any other decision on this one. So let's see how price plays out during the New York session. I hope I made myself very clear. CCIU star. If you have questions, feel free to drop a comment in this comment section, and I'll be willing to be of help. Okay. All right. I'm glad you get that. You're welcome. So I have 4 minutes left. Can I take US Tech? 685. Can I take? Yes. You hope it will be up. Well, for me, I don't stick to a bias. I'm very, very flexible. So whatever price action gives me will determine how I'm going to respond to the market. So if it's going to go up, I want to see structures that will support it going up. And if it's going down, then I want to look out for structures that support that momentum. So let's see how price plays out during the New York session. And I trust you'll be on standby to take advantage of that move when it finally happens. Okay. So I'm sorry we'll not be able to take US Tech today. I'm so sorry about that. I'm already on time already. Let's do a recap of what we talked about so far, and then we call it a day. So moving, we started the day with the US oil, and on the US oil, I shared with you scenarios that we could be expecting during the New York session, and we used our 1 hour time frame to do this, and we identified that price has been caught up within a consolidation phase since it broke down that key level at $95 mark area. And one thing I said here is that we want to be patient enough to wait for price action to do a breakout of that structure to give us a signal of what direction participants of the market are actually going to. And if price breaks out of that structure, remember, we are not getting too excited. We want to wait for price action to give us that confirmation before we want to join the rally or decline. So like I said, we have a structure here. If we have a breakdown of the structure, we wait for price to do a retest of structure. It could retest this level, or it will go as far as retesting the key level here before we see that bearish potential. So I said if we are selling here, we should have our take profit target around the $90, $91 area, at least for the meantime. And the reason is because this area has been a demand zone in the past. So we want to see how price will relate with that level. If we further have a breakdown of that level, then that gives us a confirmation. That gives us a signal that we are going to the downside. Then we want to wait for price to do a retest of structure to give us that confirmation we are looking for to join the decline. Then the other scenario I shared with you here is that if we have a breakout of that channel, that is price breaks out of that channel, and one thing I want to see is actually a breakout of that key level at $95 mark area. If that happens, then a retest of structure should give me a confirmation. The retest of structure could be the retest of that bullish trend line, the green dotted line on your screen, or it could be the retest of the key level, or it's in fact it could come as far as coming into the channel one more time before we now cite a reversal pattern on lower time frame to join the rally to the upside. And if the rally happens, I told you our take profit target should be around the $100 mark area, which will dovetail to about how many pips that is. I think we around 500 pips to catch here if price moves as expected. And there is a caution I made here. I said we have this bearish trend line here, and as soon as price tests this bearish trend line, if price comes into this bearish trend line area, we want to move our stop loss to break even, because we don't know how price is going to relate with that level, because there is a possibility that price could push, that level could push price to the downside. So if price comes into that level, what we want to do is to move our stop loss to break even or lock in some profit at that point, and let's see how price relates to that level. And if we do have a breakout of that level and a retest of that level happen, then just know that you are welcome to add more position to your existing trade. So that is that on the US oil. Then we moved on to talk about the UK oil. And on the UK oil, we also have a similar scenario with what we have there on the US oil. And what I explained here is this: we have a channel already that was cited, and I'm expecting a breakout or breakdown of that channel to give me a signal of where price is going to be moving during the New York session. And this is what I was saying: if we have a breakdown of that channel here, then a retest or structure should give us further confirmation to join the decline to the downside. And if a decline is happening, our take profit target should be at around the $96 and the $94 level, which will dovetail to about how many pips? Around 300 pips to catch here. And we want to see how price relates with that level. And if we do have a further breakdown of that level, then that gives us a signal and a confirmation to join the decline to the downside. So that is one scenario we're looking out for. Then the other scenario I'm looking out for here is to wait for price to break above the $100 mark. So I want to see a breakout of structure like this. If a breakout of structure happens, remember, we are not getting too excited. We want to wait for price action to come back and do a retest of that key level, or it will come into the structure. We'll look out for reversal patterns on lower time frame to join the rally to the upside. And if the rally happens, where will our take profit target be? Remember, we have a structure in the past that has been a supply niche. Look left, we can see around the 108, 107 area has been a very strong supply niche for participants in the market, as they've always come here to gather and sell. So there is a likelihood that price will come into this area, and there is a selling opportunity could come in from there. And if price breaks above that level, then definitely a retest of structure should give us a confirmation to join the rally into the upside. So this is the scenario I'm looking at for the UK oil. Then we moved on to talk about the AUDUSD, where I was telling you I'm expecting a bullish momentum on this one because I took an opportunity yesterday but was taken out at the break-even level, and I'm still looking to take advantage of that move one more time. And that is why we have identified a level that will make our job easier for us so that we don't get caught up in a dilemma during the New York session. So one thing for sure we'll understand is this, that right above the key level at 0.69150 area is a very comfortable area to buy the Aussie against the dollar. So if price breaks below that level, then we should be mindful of any bullish potential here. And if we do have a breakdown of that level, I told you that we don't get too excited. We want to wait for confirmation in the form of a retest of either the level or that bullish trend line with further confirmations to join the rally to the downside. So that's the scenario we are looking out for on the XAUUSD. The bullish momentum comes in the form, we want to continue to see price oscillate right above this level, probably form a reversal pattern there, and then join the rally to the upside from this point for the bullish potential here on the AUDUSD. Then we went on to talk about the GBPUSD. I think that, okay, on the GBPUSD, I told you how I'm still expecting a bullish momentum. Yesterday, I shared with you this structure. We were able to identify a key level at 1.21900 area, which shall serve as our yardstick for this week. And I'm expecting price to continue to oscillate right above that level. And our take profit target for any bullish momentum on this one, at least for the meantime, is going to be at around the 1.23 area and 1.235 area. At least for the meantime, this area is right around the bearish trend line that we identified on the daily time frame. So if price now breaks out of that structure, then we could now be thinking of adding more position to our trade at further confirmation of a rally continuation. And I told you that I'm not going to be selling the GBPUSD not anytime soon unless I see a breakdown of this bullish trend line here and a retest of structure to give me further confirmation of joining the decline. So the only time I'm going to sell the GBPUSD is when I see a breakdown of this bullish trend line. So this bullish trend line shall be our yardstick for the week, and coupled with that key level at 1.21900 area, I'm looking to take advantage of a bullish momentum here. Then we went on to talk about the gold. On the gold, a bullish momentum is still what I'm looking for on the gold, but I showed you a key level at 1774 area, where right above that level seems most appropriate, most comfortable to be enjoying a rally to the upside. And if a rally to the upside happens from this area, our take profit target for the meantime should be around the $1,800 area, around that area thereabout. Seems to be most appropriate to take our profit for the meantime. And if price breaks above that level, then we will be thinking of something else afterward. But for now, let's aim at the $1,800 level. Then in case price breaks down, that's in case breaks down the $1,774 level, you might be saying you want to sell. No, I'm not going to sell the XAUUSD unless I see a breakdown of that bearish trend line. And let me share it with you again. On the 4 hours time frame, we have a bearish trend line. We have the descending channel, this trend line here, I waved it on the screen. So I want to see price come back below this channel, inside this channel, then I know we want to be having a selling situation here. So if price goes down that area, then I want to be looking forward to a retest of this level to join the decline with the take profit target at around the $1,740 mark. But I'm not sure that's going to happen, not anytime soon anyway, not in the next couple of hours. But if it does, I'm already getting ready for a hit in the form of a breakdown retest of this level. So these are the scenarios we are looking out for on the in the New York session. We were able to talk about the US oil, the UK oil, the AUDUSD, the GBPUSD, and the gold. That's like five major pairs and commodities we looked at today, giving us quite leverage and opportunities to take advantage of during the New York session. So thank you very much for being with me this morning. I really appreciate every moment I had with you guys. You guys have been wonderful, and I look forward to seeing you guys same time tomorrow, 11 a.m. West African time, 10 a.m. UTC as usual, same place, Extreme Speed Live app, and let's have some time together again to review what we did today and what plans do we have for tomorrow. Thank you very much for being around with me. Wish you best of luck, and bye bye.